Hey, what's going on? It's Amy Nicholas. Welcome back to the channel. If you're new to us, feel free to drop a comment, say hello. Let me know how long have you been in day trading. Me personally, this is month number 4. We're going into for March. And in this video, I wanted to share kind of some updates to my strategy. Every month I'm kind of assessing, what's working, what's not, what has changed in the market, what do I need to adjust, are things that I was doing not working as much or not working at all. And there was some things I thought about this past week where I saw potential additional opportunities that I wasn't taking advantage of. So I'm gonna kind of tweak what I'm doing, and I'll share with you exactly what I'm looking at going forward into next week, which will start with March 10th. So one of the things I noticed was when I first started day trading, kind of November, December, I was taking my time being in a trade. I wasn't trying to jump in and jump out. I wasn't scalping or anything like that. Now, granted, I also wasn't using stop losses, but the market was very bullish and things worked in my favor a lot more so than they didn't. So, live and learn. But what I want to kind of focus on this next week is, instead of trying to look for these tiny windows of momentum trades, is what I like to do. Instead of looking for these tiny windows where you get a spike, up or down, either way, but the momentum is short-lived and I might only be in a trade, 1 minute, 2 minutes, 3 minutes, something like that. And in the past, I've just kind of set it and forget it, like put in a take profit amount, walked away. That's kind of one of the things I want to try to implement this next week is, pick your setup, take your time getting in, set a trailing stop so that, I can just walk away. I don't have to worry and sit at the computer and stare at the screen hoping that it's going to go my way. But rather just, set it, put it in there. Probably I'll mostly be doing 3-way orders where I'm buying, putting in the sell for a take profit amount, and then also the trailing stop. So three things at once, which you can do in Thinkorswim through an OCO order, which is one cancels the other. I think it shows up as first triggers. I've got it saved as a template in mind so that when I click the custom template, everything pre-fills. All I have to do is either change the security or change the number of shares. And yeah, everything's even set in terms of the stop loss. So depending on what I'm trading, if I'm going long on Tesla or short on Tesla, for example, I might adjust the stop loss because TSLR is around $16, $17 a share versus TSLQ, which is the short one. That one is in the 50s. So you kind of have to adjust because it's going to be different movements of price action on those. The other thing was to test different times to trade. I've been pretty steadily trading just 9:30 to 10:30 Eastern, which is 6:30 to 7:30 my time. And it feels like the opportunities aren't as plentiful as they were even just a few weeks ago in that time frame. I kind of feel like if I extend it another hour, I might get a chance to just see some more movements that I'm potentially missing as I walk away, too soon. And before, it seemed like things were dying down after the first hour, but now watching the charts, looking back, it's kind of like I see some areas where you thought, oh, that one stock was never going to go back up, and then it did, right, in that next hour. One of them, I can't remember if it was, I think it was Tesla. It had a nice move after, it was actually 2 hours after, more than 2 hours after the open, which is a little bit unusual because that's also, again, when things really start to slow down. But this move happened at like 11:40 Eastern time. And I was like, oh, interesting, and if I hadn't gone back and checked the charts, later in the day, I wouldn't have seen that, but it gave me an idea to just kind of like stay a little longer to see if there's other opportunities. Don't try to just rush in just because you feel like you got to get in that first 15, 20 minutes after the open, which is statistically the last 2 weeks where my best trades have been, but it's also because I'm only trading that first hour in most cases. Now, I think there was a few days I set the computer for like 90 minutes or almost 2 hours, but yeah, for the most part, I feel like if I extend my window a little bit, I'll see some more chances for better setups. And also to set alerts on my phone so that I can come back and trade if it's some random time in the day. If I'm actually, home at my desk, I'll come back and I'll set up an order, even at some weird time. Like I've seen some moves happen, like 1:45 Eastern, 2 o'clock Eastern. It's kind of like random time frames. You don't really know. Maybe there's some news that has just popped out. Sometimes stuff just starts moving and it's like, oh, okay, if I had just walked away in the morning because it wasn't a great setup, but then I saw something later in the day, that might be the winning trade of the day. That might make not only my day, but my week, maybe my month. You just have to kind of be open to these other chances that are there for you, especially in these markets right now, right? The volatility is crazy. The other thing I want to do is test tighter stop losses when the market is ranging. So when you get this this chop kind of stuff going on, it's just sort of staying in the same range. It's very easy to quickly lose money, because if your stop is too wide and it's just like one little spike down or one little spike up and it kicks you out, but then it just keeps ranging, your chances of risk are high and your chances of profit are low, right? Because you're not getting the momentum in the direction that you need it, and it's staying in that range for too long. You're not even getting close to a take profit amount that makes sense. So I'm gonna test tighter stops when it's doing that, and I usually go about 40 cents, sometimes 45 cents stop. Probably gonna try out 30 cents. And if it's really crazy, where I feel like I'm not even sure on this trade, maybe 25 cents. But yeah, 30 cents is kind of my testing ground for the next one. And the other thing I like about that is that if I have a tighter stop, I can buy more shares. So if I can buy more shares, my potential for profit is higher, right? At the end of the day, it's going to go back to what I mentioned in my prior video about working on my entries. So I can get in at a better entry, then there's less chance of me getting stopped out. So get that right. Don't have to worry about so much of the stop. Take more shares and potentially get a better profit because I have more shares. I'm going to start adjusting also the stops for the different price ranges. So I mentioned TSLR and TSLQ. They're very different price points because Tesla has moved so much that now, TSLQ is 50 some dollars. TSLR is like $16, $17. And I have to keep that in mind now when I'm trading them, that I got to adjust that stop. So if I have a custom order template come down, I need to make sure that I'm in the proper range for the proper ETF. So for example, with TSLR, which is the cheaper one, I need to keep my stop between 15 cents and 20 cents, because if I want to take profit on that, it's not going to move these big jumps. You're not going to see like a dollar move on that ETF in a short period of time. Maybe throughout the day, yes, half a day even, but not in the time frames I'm usually trading. So my take profit, if I'm doing a 15 to 20 cent stop, I'm looking for 30 to 40 cents. I'm looking for that 2-to-1 ratio, if at all possible. Otherwise, you don't want to put yourself up for too much risk. I've made the mistake of trading that ETF and having my normal like 40 cent stop. And I'm like, wait, I just lost say 30 or 35 cents when I shouldn't have even had a stop that high. I should have had it at 15 to 20 cents, right? So I would rather just be playing it according to the proper price point and in projected move that it could make, The other thing is logging how I'm feeling every 30 minutes. I got this idea from the one guru guy on YouTube, Lambo Rowell, I think is how you say it. He talked about how he logs in his trading journal every 30 minutes what he's feeling, like what frustration, what are you feeling, FOMO, how did you feel about that last trade? Like he's just taking time to kind of pause and pull himself away from the intensity of what's going on, and he's like recording it in almost real time. And I thought that was a good idea because sometimes I won't even think to write anything in my journal until I'm completely done trading that morning because I'm just like so dialed in. But I almost think that could be a hindrance, is if you're too dialed in, you're not aware of your emotions, and it's harder to practice that mental discipline that's required for trading, right? You don't know, am I feeling frustrated? Am I gonna start revenge trading? Am I taking risks that are too big? You don't know because you're not conscious of it. You're just acting without thinking. You're just watching the charts and like clicking things and hitting buttons. And I think it's better to do what he's doing with like every 30 minutes or so. You're just like, okay, let me take a breath. let me journal this out. Let me become conscious of what I'm doing right now, and then I'll step back in. The other thing I wrote was, if momentum swings are not happening on my normal, lately I've been looking at the 3-minute chart just to kind of give myself a middle ground between the 1 and 5 minute. If I'm not seeing the momentum swings happening that I'm looking for as the type of trader I am, then I need to expand my time frame. I think looking more at 5 or 10 minute charts for those taking longer to set up moves, that would be why I would do that. So when I mentioned in the beginning about potentially trying to just take my time and be in trades longer, wait for those bigger moves if I can, that would be the reason to change the chart I'm looking at, right? Just kind of looking at a longer time frame. Okay, where's the overall trend? And as long as I don't get stopped out, there's no reason to prematurely jump out. I think there's times where I've canceled my stop and I've just sold at the market to exit a trade that I felt had turned against me. But as you know, sometimes things do turn against you only to then turn back around after you exit. And it might not happen immediately, but it could happen in the next 5 minutes, could happen in the next 10 minutes. And if I'm just willing to be a little bit more patient, let the setup play out. If I've got my stop, there's nothing to worry about, right? I'm willing to risk X. I can walk away, let it do its thing, set a reasonable take profit amount. Like I'm not trying to, wait for crazy moves or anything. And if I come back, to look at it 10, 15 minutes later, and I'm like, wow, it's really not even close to my take profit at this point, and maybe I just want to be done for the day. In that case, maybe I'm exiting the trade, but I need to give it a chance because we're just not seeing the volume right now. Like 3 weeks ago, 4 weeks ago, month and a half ago, the volume was very different in the markets because people still had faith that we should put money into the market and we should invest in stocks and we should trade and let's be in it. And now there's so much uncertainty with what's going on in the States, with the tariffs, with all these new changes and all this policy stuff happening, that people have become very hesitant and very uncertain about whether they should even have money in the market. I think I had heard a statistic recently about how much was actually being pulled. It's a lot. And I myself included. I've turned a lot of my stocks and assets, ETFs and things into just cash because I'm like, yeah, I'm not interested in watching it just drop. Certain positions I'm holding on to because of course it's like, well, do I really want to sell for that much of a loss? So I totally get the sentiment of that. So just keep that in mind, like when you're trading, what's the overall thing? One of the things I like to look at is, I don't know if I can pull it up here. There's a CNN report. It's called the Fear and Greed Index. So let me see here. Where are you, mouse? Okay. Let's see if I can find it for you guys real quick. Okay, yeah, so the Fear and Greed Index, you can see there's a range here. We're in the 20, which is extreme fear. We're all the way over. The other side is extreme greed, which you have to be over 75 to be in that category. So right now it's at 20, and the next category would be fear, then neutral, then greed, then extreme greed. So we're in extreme fear, and this is based on kind of the overall stock market. They're looking at the Dow numbers, S&P, the NASDAQ, and there's a range. And you can check this on a daily basis. They update it every day. So there's one for this one. There's also one for Bitcoin and crypto. I just Google these to find it. Crypto, it's gotten slightly better. I don't know if I can make this better. It's at fear, number 28. And also this one shows you historically. Yesterday was fear at 34. Last week was extreme fear at 20. So you can kind of see the slight difference on here. of where we're going with crypto. And then last month we were neutral at 49. So a lot more people felt okay about being invested in crypto. It's basically neutral. And last week was extreme fear. This is when we had those drops into the 70s, right? And now, yesterday, Friday, we're still in the fear range, but it's starting to kind of stabilize. It's not so like, oh my gosh, So anyways, these two indexes I find helpful to kind of see like, okay, what's the sentiment? What's going on? Just keep in mind any news that comes out could just totally move things in an opposite direction very, very quickly. I heard a great quote. In fact, I've heard it numerous times that, the stocks, they take the stairs up and they take the elevator down. So think about how long it takes sometimes for these nice moves, up, 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 up. And when things are ready to turn around, it's an elevator. It's a drop sometimes, just huge drops. So that's kind of what we were seeing in the market. So just keep these things in mind, guys. That's why I updated my trading strategy. Feel free to share in the comments, any tips you have, like what have you adjusted in your trading strategy now that the markets are just sort of all over the place. We don't really know day to day, like, are we going to be buyers? Are we going to be sellers? Just feel free to share what's going on in your world and like and subscribe. I'll see you on the next one. Take care.